If you are a paper millionaire, meaning you're a millionaire owning stock, no matter what stock, SoFi, Palantir, Hood, Hims, a lot of you guys are in the same boat, but you living a lifestyle that does not match your paper gains, then this video is for you. What's the point of being a paper millionaire but not living a good, healthy lifestyle? Don't be a millionaire eating ramen noodles. I'm going to show you a better way in this specific video. In today's video, I want to talk about a very, very important strategic technique when it comes to selling options. In this specific strategic technique, I'm going to be covering covered calls. When selling a covered call, you have a couple of different options or strategies in doing so. One strategy might be a wheel strategy where you're selling a covered call, and if your shares get assigned, then you just do a cash secured put on the same exact stock, and then you buy the shares, and then you sell a covered call, so on and so forth, rinse and repeat. Another strategy could be you want to sell a covered call as an exit strategy to get out of a position. Another strategy, which is the strategy that I personally prefer, is selling covered calls to get maximum price appreciation and at the same time, in addition, accumulate wealth by selling covered calls and receiving premium. But the premium is not in lieu of price appreciation. The premium is in addition, the cherry on top to outperform the stock itself. If you're confused, I'll explain. Very quick. What exactly is a covered call? A covered call is when you own 100 shares of a stock. That's enough for one contract. And you say you are willing to sell one contract, 100 shares of stock at a certain price. This is called a strike price. At a certain date, this is called the expiration date. That strike price is above the current share price. And you, as an option seller, depending on what strategy, has to pick the strike price and the expiration date. For me, the expiration date is very simple. I go 4 weeks out, or I do Hail Marys, and I go like 6 months out, depending on the specific strategy. But for the most part, 4 weeks out. When I am selling my covered calls 4 weeks out, I want to get the maximum amount of share appreciation I can, which means currently Palantir is trading at like $185 a share. I don't want to sell my shares at 180. I don't want to sell my shares at 175. I want to sell my shares. Not happening. I want to get maximum price accumulation, and at the same time, I want to collect premium. I'm going to show you some examples in just a moment. Same thing with Robinhood. Robinhood right now is trading at like 110, 115. I didn't check the price. Well, I don't want to sell my shares of Robinhood at 110 or 115. I want to not sell my shares, get maximum price appreciation, and at the same time, I want to outperform the underlying stock by collecting additional premium along the way. The premium is not the end-all, be-all when selling covered calls for this specific strategy. The premium is just the cherry on top. It's just the icing on the cake on top of full price appreciation of the underlying stock. Some people might be watching this and say, Adam, that's not possible. And to this, I'm going to say, yes, it is possible as long as you have a system. And the system in place is to pick the right strike prices, most importantly, above all else, and secondary, to pick the correct expiration dates and possibly to avoid certain events like earnings calls that will give you the most advantageous position possible, the most opportunistic opportunity or scenario in front of you to make maximum share appreciation and collect a nice hefty premium that you can then use to buy more shares, or use to buy different shares of something else, or use to pay yourself a steady income stream. I'm talking about this because a lot of people in the community made tons of money for SoFi, tons of money for Hims, tons of money for Palantir, tons of money for Robinhood, and they are paper millionaires, but they're living broke. So there has to be a better way that if you're a millionaire on paper, you have to be able to pay yourself. You can't be a millionaire on paper and not be able to live a better life. Because if that's the case, what is the point? If that's good for you, you do what's good for you. But in my opinion, like, what is the point? I'm going to show you the screen in just a moment. A lot of you guys have been asking me, Adam, when is the website up? And the website is currently up. There's going to be a link down below in the comments. My website is called retiredasap.com. I currently have a bunch of tools up, like my options calculator for cash secure puts and covered calls, a widget that plug and play my personal TradingView charts. Instead of paying for a subscription fee, you can just get it for free as community members on my website. I have a trading log, and I just uploaded an Excel sheet that tracks my option sells, my options buys, my share sells, and any dividend income that's coming in, including a demo for the downloadable Excel sheet. I have a lot more things coming, and the first live during trading hours is going to be at 10 a.m. this coming Tuesday, live during trading hours for several hours Eastern time. If you guys want to sign up, the link is down below. If you do, I really do appreciate that. Take a look at the screen. Right now, Palantir is trading at $186. Imagine currently we are in August 8th. So imagine in January, in February, in March, in April, in May, in June, in July, and in August for the last 8 months, you were able to gain an extra $1 per share of Palantir stock that you own, in addition to this $186 share price. Wouldn't that be really cool? Wouldn't that be really interesting? Wouldn't that be dope? So some people might say, Adam, how would you do this? And it's a very simple formula. And then I'm going to show you some proof is in the pudding, because I made 2 videos on Palantir covered calls, and both of them were unassigned, which means expired, worthless. So you would be making the same exact gains. Let me show you right now. If I was to sell a covered call on Palantir right now, number one, avoid earnings. Don't sell this 2 weeks after earnings. Don't sell this a week before earnings. When earnings comes, just skip that sell and then redo it after earnings. And keep in mind what I just said, because it's going to correlate to one of my videos. If I was selling a covered call on Palantir, I would press sell, call. I would go 4 weeks out. August 8th is today. It doesn't count. 1 week, 2 weeks, 3 weeks, 4 weeks. September 5th. This is where people get into trouble from everybody that I'm speaking. Most people would sell a covered call and they would go to around 78%, which is roughly 30 delta. Now, some people that are a little bit better at this would pick an 85% or roughly a 20 delta. None of these are exactly bad. One of them you would collect $4.63. Another one you would collect $2.55. However, this would still get you in trouble. And I see this happening like crazy on stocks like NVIDIA, AMD, SoFi, Palantir, HIMS, and Robinhood. Now, HIMS came down, but the other stocks that I just mentioned are absolutely on a tear. So you don't want to put yourself in a bad position. So you want to sacrifice the premium collected in order to get maximum price appreciation. How would you do that? Very, very simple, especially because most of you guys bought in really cheap. I would not be selling anything less than this right here, which would be 93% in my favor, or a 0.09 delta, which would give me $1 of premium or income. If you want to be extra safe, you could even go to this one right here, which would be a 230 strike, 80 cents of premium, giving you roughly 95% in your favor, or 0.07 delta. So I would not be doing anything less than 225. Most likely I would be doing 230 just for some added security. And I'm going to show you in just a moment, using my calculator, how much money that actually is on your initial cost basis. What you are saying is you don't think that Palantir in the next 4 weeks is going to go to $225 or $230. And for this, somebody that is buying this option is paying you this. Anything can happen. But let's just go into Palantir. This is my website, guys, by the way, Retired ASAP. And like I said, instead of you paying for a trading view, you could just go directly on my website. You can put in the word Palantir. And when you put in the word Palantir, it's going to give you a Bollinger Band right here. And it's going to give you an RSI and a bunch of moving averages. You can change this, by the way, as you want. So, for example, I have settings of 30 usually. This is set to 20. And these colors you could change of the lines. All you got to see is that Palantir is crazy, crazy, crazy on top of the Bollinger Bands, which means that there is a possibility that it's going to cool off. As you can see, it rises the Bollinger Bands, it cools off, so on and so forth. If you're going to go to the RSI, you see that the RSI right now is crazy high. And usually when the RSI is high, there's a drop. For example, RSI high, drop, high, drop, high, drop, high, drop, high, drop, so on and so forth. So there's an opportunity for a price drop. It doesn't mean that there's going to be a price drop of $20 or $10, so on and so forth. It just means that there's a possibility for a cool-off period, which is great for you as an options seller. The second thing that I want you to do is go into my options calculator, or you could calculate this yourself. Instead of cash secured put, I want you to put in covered call, and then I want you to put in the symbol, which is Palantir, fetch the price. And there's going to be two calculations over here, okay? There's going to be the current share price. So let's say you're doing a covered call on the current share price, but in reality, what you want is your cost basis. Is it safe to say that a lot of you are in Palantir on the lower double digits? Let's say you got into Palantir at $50. Let's just say at $50. You would put in $50 right here. The strike price that I just picked would have been like a 230 right here. Okay, 230. Let's go into 230. And how much premium would you collect? At 230, you would collect 80 cents. 0.80. Let's go into the expiration date, which would be September 5th, 0905, and then you would calculate. If you are calculating based on your cost basis, you would be collecting 1.6% on your cost basis. What does that mean? That means that you are collecting based on a $50 average. By collecting 80 cents, you would be collecting 1.6% per month, or roughly 21.46% for the entire year. This is amazing. It's not exactly the same percentages if you're using the current prices of $186, but I'm not talking to most people here. I'm talking to most people here. Some of you guys might say, well, Adam, that's great, but I didn't buy at $50. Well, okay, let's say you bought Palantir at $100. Not a problem. Let's calculate. You're still making 0.8% on this trade. For the whole year, this would be roughly 11% on your money. But some of you guys have a $10 cost basis on Palantir, which means that you would be collecting 8% on your money every single month, or actually more than every single month, because it's technically 4 weeks. Now, I made a video. If you go to PLTR, I made a video right here on May 19th. On this May 19th, and in this video, I said that I would be doing roughly the 160, or the one on top, 165, expiring on June 13th. And I collected roughly the same exact premium that I'm showing you right now. Now, this expired worthless. I collected that 80 cents. And then I ended up making a second video, which was this one in July 14th. And on July 14th video, if you're going to go to my actual strike prices, I was picking, I believe, the 175 strike at a 92.3% in my favor, collecting, look at that 80 cents in premium. I'm not greedy, and I'm okay to collect this 80 cents in premium. In this video, if you notice, the expiration was August 1st before earnings call, which was like August 5th, if I'm not mistaken, because I didn't want to risk it if I was in Palantir, which I don't have Palantir shares, my kids do. But if I was in Palantir and I had shares and I wanted income, this is the play that I would do. Now, past performance is not indicative of what's going to happen later, nor am I convincing you, nor am I telling you to do this. This is just entertainment. I'm just explaining to you that there is a way to get maximum price appreciation and income or premium on the side. Now, the higher the stock price goes to these astronomical levels, which I think the biggest OG Palantir community members can say, the safer you are hitting these high targets. You don't have to pick this 225 or this 230. You could literally go to 250 or some crazy number, 260, 270, because a lot of you guys have tons of Palantir shares and all of this adds up. Let's say you would go at 9 cents. Let's say the worst case scenario, you would go at 9 cents. So let's pick our strike price of $270. Let's say you bought your shares at $10. Your strike price is that $270 and you're collecting 0.09. You would be collecting 0.9% every single month on your initial investment, or that would be an additional 12% for the year. Let's say you bought it for $100. That's your cost basis. Well, you would still be collecting 0.09%, and it doesn't seem like a lot, but you would still outperform the current trajectory of Palantir by 1.21%. Who doesn't want an extra 1.2% dividend? Think about it. It's like a dividend. Microsoft has a dividend. Google has a dividend. NVIDIA has a dividend. Well, you are making a synthetic dividend that is paying you more than those dividends. And you could do a very similar style to any stock that we're talking about. The point of this video is not to tell you to sell options against Palantir. The point of the video is to teach you a lesson that you can have maximum price appreciation and collect premium along the way. When you're selling options, you just need to know that it is a possibility that you are going to get assigned. Palantir could absolutely go to $300 tomorrow, $1,000 tomorrow, $50,000 tomorrow, right? Anything could happen, and there could be a scenario where you can't get out. So you just got to understand that if that happens, you need to be okay with the price that you're selling at. But I found that if you're selling it at such a high, 93, 94, 95, 96% in your favor, covered calls, that the probability is slim. It's not none, but it's slim. This is something that has been helping me in generating income. And this is only for those people that want to generate income. But literally, I'm speaking to a lot of Palantir millionaires, Hood millionaires, and other stock millionaires, SoFi millionaires that I speak to on my channel, on my one-on-ones. And when I'm showing this in an entertaining type of way, obviously not financial advice, they're like, holy moly, this is absolutely insane how much money I will get, because people own thousands and thousands and thousands and thousands of shares when it comes to these different stocks. Guys, this is just for you guys to get an idea and understanding about what's happening. It's not advice on what to do. It's just a guideline and a train of thought. You guys do what's good for you. Don't feel pressure to do one thing or another. I'm just sharing my personal journey with you. And the point is not to sell covered calls to get assigned. The point is to sell covered calls with the attitude that I want maximum price appreciation. I don't want to sell under any circumstances, and I want to collect that juicy premium on the side. That 98%, 99% is obviously a crazy thing. But if you're selling it around that 95% in your favor, you're collecting a pretty penny in premium. And the lower your cost basis is, the higher that penny is. This is just an example. I'm using Palantir. You can plug and play any stock that you want. Don't blame me if you do lose your shares. This is not for you to put up your shares to sell. This is for you guys just to have a train of thought and see that there is a way that on paper you can be a millionaire, but you could also live a millionaire lifestyle or a good lifestyle without selling your shares. And that's the point of today's video. Thank you very, very much and have a blessed day.